Hey everyone, welcome back to Financial Education Sucks podcast. I am your host, Grant Raskin, and today I am happy to say I have not only a good friend of mine, not only a mortgage expert, but also a pretty damn good golfer, Mr. Tony Rizzello. Tony, how you doing, man?
I'm good, man. How about yourself?
Doing well, doing well. Thanks
Good.
for hopping on here today. I know
Glad
we've
to be here. Thanks for inviting me.
yeah, man, been bugging you for a while. So I
Yeah.
figured, get you on here, and really just want to pick your brain today with where this world is, with the real estate market, the mortgage industry, interest rates. There's just so many things going on right now. But before we get into that, please take a minute or two. Tell us who you are. What's the last 20 years been like for you in the mortgage business? And love to get our listeners to learn a little bit more about your background.
Sure. I've been doing this 21 years, if you can believe that. It's my 21st year. Started actually while I was still in college. I feel like I had a pretty well-rounded education in this industry. The subprime to call center to retail is what we do now. Mostly focused on purchase business, refinancing. First-time home buyers. Really always want to chase the purchase business just because everything else comes along with it.
Right.
Relationship built. Been doing it a long time. It's been a roller coaster ride, but it's always fed me well. So
That's awesome. Yeah, I mean, listen, just with our friendship, I know you've been a monster in the business for years. You've been able to help out not just family, friends, clients of mine, myself personally have done, our mortgages. So thank you. I know a lot of people out
appreciate
there
the
that will
business.
see this and hear you've helped. So we appreciate it. Tony, from my perspective as a financial advisor, there's questions I get hit with every day, right? As you know, a few months back, the Fed cut rates. And it's
I know
right.
where you're going with this, but sure. Yeah, go ahead.
Yeah, I mean, you laugh, I laugh, right? Because I think your average person out there saying, great, now mortgage rates are going to go from 7 to 5. And I think there was a lot of expectation. Right. Yeah, exactly. Fingers crossed. I think there's a lot of expectation for rates to have dropped with, that cut, and we didn't see it. So
Yeah.
what's the market outlook now? What does 25 bring us? I know that the Fed's looking at cutting rates, hopefully 2-3 times. Who knows?
Yeah. I mean, those are the short-term rates. Those aren't,
Right.
the long-term mortgage rates, right? So, when they cut those, like I think it was September 28th, if I'm not mistaken, they cut the first 50 bips. I think we went up pretty much every day since then until Trump, until after the election, really.
Yeah.
Then we had a few good days and then right back to going up. So unfortunately, that rate cut didn't really help any mortgage situation. Really, it's going to be inflation. So, if anybody tells they know what's going on, they're lying to you, unfortunately. So
Yeah,
I think as long as inflation's roaring, so are rates. That's just the way it's going to be.
And with rates, obviously, it's driving the cost of home ownership up.
Yeah.
Can you speak about home ownership? What's the real estate market looking like? You're a Bucks County guy.
Yeah.
Live and work out of Doylestown. So
Yeah.
what's it looking like, man?
I mean, look, people are still bidding on homes, trying to outbid each other, trying to win just because inventory is low. What next year brings, I assume it may be the same as this year. I think it's going to take a little bit of while for rates to really still come down. But again, you give you that cliche saying, and I don't like saying it at all, but you marry the house, you date the rate. You can always refinance your interest rate. You can't refinance your purchase price. So when those rates do come down to those fives, whatever it may be, I think you put a 5 in front of anything. I think you're going to create even more demand, get a lot of people off the bench to come out and start doing it all over, right? So
no, and listen, Tony, you and I have had the conversation, right? Do you buy the house now? Do I wait? Are interest rates going to come down? What's going to happen? What do we expect? Do you think people should wait? I mean, you've always said to me, right?
No.
Yeah, just
people that are waiting, unfortunately, they're just losing money. Yeah, this rate. Oh, what do you need? A 1-2% drop? Is that really that big of a deal in your monthly?
Right.
Of course you're going to spend more interest, but you're going to get yourself out of it. Rates will come down at some point, whether it's next year, 26 or whatever. You will refinance your loan. You will get a lower rate. You will reduce your monthly payment. But
And we also have the equity in the home that's going to be growing over that time.
Well,
right?
correct. You're paying down your loan, the appreciation, because it's just going to continue to go up.
Yeah.
I don't think waiting is the smart play.
So Tony, when you start to look at mortgages and like you mentioned, right, what does a 1%, 2% interest rate make a difference on payments? Can you kind of walk us through? And I know you've done it for me. I know your process. Someone's coming to talk, hey, I'm looking at buying a home, right? And obviously that's a little bit different process than somebody who's looking to refinance. But that person that's out there now, they're looking to buy in a home. Where do you start with that person, right? I mean, where are the questions? What do they look for? What should people put together, have ready for you so that you can go ahead and get them, lined up and pre-approved for the home they're looking to purchase?
Well, I mean, it's really just the application. I mean, you got to do the application. You got to, we have to take a look at the 3 puzzle pieces, income, assets, credit. You have to, if there's some place to improve, we're going to tell you how to do it, get you there, get you the roadmap to getting there. And if you wait until the last minute till you find that dream home, and then you want to go get pre-approved, and now you have a problem, you don't have any time to fix it, and you miss that house. So first thing is to talk to an expert like me. It doesn't have to be me. You can talk to anybody, obviously, and get yourself on that roadmap.
So Tony, for that first-time home buyer you mentioned you enjoy working with, young couple or someone.
They're the best ones.
Yeah. Why is that?
They listen to you typically. They don't think they know everything. They listen to you. They follow your lead. They're appreciative typically. All of those things, and it's the feel good of the industry. Look, what I do isn't glamorous, but when you get someone in their first home, or you get somebody who never thought they would own a home and get them in a home, it's the feel good.
Listen, it's we say it all the time in my industry. It's the biggest asset you own, right? Like that's your house.
It's how you build wealth. Unfortunately, most people listening to this won't be an elitist, right? So, the way you're going to build your wealth is probably through a home or multiple homes, right? So that's how you're gonna build it. You can work your butt off and save every day in your 401k, your savings account, but you're not gonna get the money you do without buying
the house.
Yeah.
So Tony, when you talk about the money, right? Can you talk of us a little bit about or speak on? And I know I went through it, clients, friends. We've heard that you can put 3% down on a certain type of loan. I can put 5, 10. I should put 20% down. Like, what do you recommend? What types of programs are out there now for people who are looking to buy that home or that second home, whatever it may be, right?
Yeah, I mean, it all depends. I mean, if you're a first time home buyer, there's a lot of things that open up to you. We do financing above 100%. You can go 101.5% financing on a home. Throw in a seller's assist, and really they can come out of pocket with nothing. So there's a bunch of different avenues. Obviously, look, the 20% down is, I guess, quote unquote, the best way to buy a house, but that's typically a big nut,
Yeah, especially in today's market, right? I mean,
with
home prices where they are, especially in our area, Bucks, Montgomery County,
it's difficult,
right?
Nut.
Yeah, absolutely.
Unless you have some help, it's difficult to do. So, I mean, look, first time home buyer, typical 3% down, 5% down is, the typical norm. You do not need 20% down. A lot of people, unfortunately, somehow don't know that.
Okay.
We have to reiterate that to them, you don't have to have the 20%. If you're renting and you're spending $3,000 a month in your rent, $2,500, why not go buy a house, right? It's your home, your asset, your appreciation. So I love turning renters into buyers too. That's always a fun one.
So that person's there now, they're listening. They're like, hey, listen, I'm putting out $2,500, $3,000 a month.
Yeah, it's crazy. Why?
Yeah, it's
you're making somebody else rich. Doesn't make sense.
And you're saying 3-5% down, even trying to get a seller's assist on there. Which
zero down. I mean, like I said, you can finance 101.5%. So I mean, it's it makes no sense to pay rent if you.
So Tony, can you real quick just talk about what a seller's assist is, so our listeners can get an idea if they're not aware?
Yeah. So it's basically just where the seller of the property can give some of their net assets to you to, put towards closing costs. And this way you come less out of pocket. If you're financing again 100% or even 97% and you get yourself an assist, it's very minimal out of pocket. It just reduces the whole out of pocket expense. You can actually, for example, for me, I bumped up my purchase price when I bought my house in order to get assist to finance in that extra like $10,000 I was missing.
Listen, man, sometimes you got to do what you got to do. I know when I bought my house, and you're well aware, right? We went in with a big number over. Are you guys seeing that still? Are you seeing offers coming in above?
Yeah, typically homes that are kind of redone or, very nicely kept, updated, you're going to get that bidding war.
Okay.
Homes that aren't, typically kind of can sit, so if those homes that are sitting, you can, shoot an assist, but you're not going to get an assist on a home that's been on the market less than 2 weeks. Typically, they're not going to entertain that.
So typically you kind of got to keep your fingers crossed a little bit and see what can fall out there for you.
Got to shoot your shot, man. Always. So, it's 100% of the shots you don't take.
It's a famous quote by Mr. Wayne Gretzky. So I think Michael Scott said it better, but listen, we'll have that conversation at a different time. So Tony, in my world, I'm watching the markets just, came over 45,000 the other day.
That's crazy.
Right? It's crazy.
Bitcoin, everything's crazy.
So people were looking, they're following, and they're hearing positively. The markets are up. This is happening. That's happening. All, good, positive news coming out. What's affecting my interest rate? Is it the data? Like, how does that tie in? What should people follow if they really want to know where does that mortgage look like if I'm
10-year treasury yield?
10-year treasury yield. All right.
Yeah, I mean, it's it's pretty correlated to it, right? Okay. So it's not always an exact science with that, but yeah, I mean, that's typically as the yield comes down, that 10-year, so do rates. I mean, the yield goes up, so do rates. There's other factors come into play too, but that's an easy way to kind of have a good indicator of what's going on.
Track it out. Yeah.
Yeah.
No. And that's good, man, because I think, like I said, we hear it a lot, what's going to happen. And I told people that, there's some pretty interesting math that goes behind a 0.5% rate cut. Your own research on that. It's, I think a lot of people expected this windfall of things, but you still have goods and services that are up here.
Well, the calls you get after a rate cut are great. It's like, oh, is it time to refi? You're like, believe it or not, rates went up today for us. But yes, I understand that, they did cut the Fed cut rates,
Listen, I see it on my.
But always check in. I'm never upset when someone hits me up to see if it's time,
Yeah, give Tony a shout, man. I mean, he's awesome what he does, and I appreciate it. But Tony, we talked about kind of where rates are looking, where they're going, a little bit about first-time home buyers, but I know that you've done a lot of work with investment properties, with second homes. We hear investment properties, we hear second homes. What's the difference from financing? How's that sort of work?
Well, it used to be the cheat code in this industry where, a secondary home, shore house, whatever it may be, was graded price-wise as a primary home. But I believe a couple of years ago, they changed that. And now a secondary home is graded just like an investment property as far as interest rate goes. So unfortunately, that's the situation. There's some cool workarounds, that you can do buying a home from mom, dad, where you can, do it as a primary home if that's truly what the situation is. And, it's not considered a second home or an investment property.
Yep.
So, but down payment obviously is a little bit more with the, investment property than a secondary home. So
I know rates typically a little bit higher as well, right?
Yeah, unfortunately, they're definitely higher.
Okay.
It's not, not ideal. But again, I mean, if you're buying an investment property, it's making you money, you're paying it down, appreciation, you can refinance an investment property.
There's a lot of factors if you're running it that way. So
yeah, and you can refinance it. I mean, things will, I don't know, lack of a better phrase, chill out, right? They will come down. So
listen, we see it all the time. We see it in the markets, ups and downs and swings. It's the long run, which is what it's about. And like you said earlier, what we talked about was your home's going to be your greatest asset for most of the people in this country.
Yeah,
right?
Typically everyone's biggest investment they make in their lives. So
that's it. And if you want to buy a second or a third or a fifth, just make sure you're structured the right way.
Keep buying properties, because that's going to be something that's going to build you a lot of money.
No, listen, I'm with you. So from that space, just kind of turning the conversation a little bit, you rent, your home out, one of your properties. To those folks that are out there saying, hey, I'm looking to start like an Airbnb, or I want to, get a property, invest. Like, what's your feeling? Is it the same sort of guidelines with buying that second investment home? Are there different things you have to look at if you're going to be renting the property? Just because I know I get asked the question a lot, and I flip it over to you. So what do you generally tell people?
I mean, as far as what, to be a landlord, like how that kind of all works. I mean, you could do it yourself like I do, and it's work. I'm not going to say it's not, because it
Yeah.
is, and most of the time it's coast. But whenever there's a problem, it's always the worst time for you. It's just life. That's the way it works.
Right? Yeah.
But again, it's not all that much work. I mean, if you can have a property where it's sustaining itself, it's paying for repairs, it's paying for the mortgage, it's all of those things, it's a no-brainer. Why would you not do that? Why would you not catch an appreciation and build it's basically a savings account, right? Because as you pay into that loan, or as your tenant pays into that loan for you,
Right.
You're paying down that principal and building yourself a giant savings account.
So I guess the big thing that we hear about now, outside of rates and things of that nature, is owning that first time home buyer, right? And I know you work with them. We talked about it before, but I think it's also developing the relationship with the realtor, right? From that side, I know that that's a huge part of your business, right? Yeah. You always say to me, hey, if you don't know anybody who's looking to buy or refinance, I love an introduction to realtors. So for our folks out there that are listening, that do what we do and are out there networking and building our businesses and our practices, who are great introductions for you besides realtors? I mean, is it attorneys, lawyers, CPAs?
Yeah. I mean, divorce attorneys, unfortunately,
Right.
financial advisors, CPAs. I mean, a lot of people really hang on everything a financial advisor says, like yourself, right? They trust what you say. They trust your recommendations. Same thing with CPAs. Obviously realtors are huge for us, but those are really my favorite one. Is the organic, friend of a friend, or personal friend, whether it be high school, family, your wife's friend, your brother's friend, whatever, right? Like those are the ones I love.
No, that's awesome, man. And I know that's how you've built your business over the years.
I guess is really what I should have said there. Yeah.
No, it's totally good, man. Listen, you build your business the same way I do, which is through networking and just building those relationships, inside the community and the areas that you grow and that you service. But you can also do loans throughout. So where else can you do business out of? Any particular
Pretty much
state?
the whole East Coast. I used to hold 38 licenses. It just got too much education wise. So Florida all the way, basically Jersey, PA, Delaware, Georgia, South Carolina, Florida.
That's good to know, because obviously we've talked about properties in other states, so that's good to know. If folks need anything, they can always reach out and
if not, we always have someone here at Movement that we can obviously refer to, that I know personally and trust, and all of those things.
That's awesome. And speaking of Movement, I know that you went there. You're pretty passionate about the company. Tell us who Movement is, man, if you don't mind giving us a little shout out to them.
Yeah, I guess they started in 2008. I'm on going on my fourth year here. It's a feel-good company. A lot of charitable stuff they do. They have their Movement schools where it's completely free. I think they have 6 at this point. So every time we close a loan, there's an impact to those schools, and we let the realtors, the buyers, borrowers all know that, hey, you've bought X amount of book bags, books, pencil, whatever it is.
That's awesome,
through that loan. So it's a very, very cool company.
Yeah, I've seen it. So it is a really cool thing you guys do, and I know that you're proud to be a part of that team. Tony, listen, man, I want to thank you. You came on today and we got this set up. Consider you a good friend, someone who's helped me build my business. Hopefully helped you build yours as well.
Yeah, man.
But I think most importantly, before we go, coming off a phenomenal golf season, Tony, where your handicap end up this year, Tony? Just curious for the people out there.
I guess it's way too low.
Way too low. Ladies and gentlemen, we're going to leave it at that. Tony,
we got to get that up for the spring. You know what I mean? I'm tired of losing money.
Man, keep it low, and I'll keep it, mine higher.
Sure.
But Tony, thanks again. Seriously, thank you for coming on.
Thanks for having me, man. Good luck, and we'll talk soon, man. All right,
buddy. Have a great one. Later.
See you, brother.